following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this, 12th day of April. And we've got just a little technical problem here so that I'm sending the charts over to the den. Hopefully you can be able to see them as I post them. They'll be live, but they'll be fixed instead of seeing them moving in real time. So here we go. Dow's down 47. At 20,605. S&P is down 7 at 2347. We've got the comp index at this point at 5846, and that is down 20. The VIX is up at the 15.61 level. It's getting a little overboard. I wouldn't be surprised if there's going to be some kind of a bounce attempt here. Most importantly, we're certainly over the 13s. Now, one of the things that I'm looking at, if you look at the ES Mini, down 7 right now, you'll see that it's got this H pattern. And what I've got there is a number 4 at the top here, and I'm anticipating that we will get a 5 to the downside below 2317.75 at some point fairly soon. That'll give us leg 5 to the downside, at which time I'm expecting that we will have a pretty decent bounce. Now, what's really important about this, in the middle chart, that's the weekly, you will see that they're making lower lows and lower highs. But what's really important about this is that so far, the E-mini has not, the S&P E-mini has not closed underneath the 9-period exponential moving average. And that's right here at 2343. So we're going to go all the way into tomorrow, which is the last day of the week. We'll see if it closes underneath there. If it does, I finally got from the sell signal to sell mode in the daily. We haven't yet got anything other than a sell signal in the weekly officially. Technically, everything about it says that I've got the down arrow. This should be a sell mode. But on a purely Chapman wave analysis level, I technically like to have a decent close below the 9-period moving average, especially when you've taken 1, 2, 3, 4, 5 to the 6th week since the first high. I'd like to see that. The MACD's turned down, the stochastic's way down 74. I shouldn't say way down. It is below 80% at 74%. So that suffices for me to be able to say this is a serious problem. So let me do this. In the 120-minute chart, you keep seeing these arch formations. You remember I've spoken about this for a while. The Chapman wave H, lowercase h pattern that can go to an M, and that's that M pattern that we're seeing right now. So there are a couple of things that we've been talking about, but let me just continue with the analysis here. You've got the QQQ series, and this is very interesting because we are short the QQQs via one of the instruments, but what's most important is that the 133.48 stop on the 5th, 133.48 high at peak F on the 5th of April essentially started an inverted Chapman wave Roman candle, which says if you start to take out the low of this candle, in other words, this candle right here with a low of 131.72, start to close below it, that negates it as a Chapman wave candle that would give you a reflexive rally towards the highs if you were trading halfway into the wick. That's done now, and essentially what we look for is almost like a one-to-one of the candle length to the downside. But the weekly charts, I've got sell signal to sell mode already in the QQQ series. I do not have that, and let me just do this again. I'm just remember I've got a chart, put that chart in. There's the chart, and that is the chart of the QQQ series. And at this particular point, you can see that the weekly chart has gone to a leg E. It isn't yet a peak E. It will be tomorrow if there's no new high above 133.48. But what's really important about this is that within the context of lower highs and lower lows, we've started to see that in the daily, but only the weekly one candle that we've got right now has made a lower low with a lower high. That's really not telling us anything. You have to see, I would say that trading in the 129s by early next week will suggest there is more to go in the QQQs, and we've got this arch formation in the 120-minute chart. Let me move this away now, and I'm going to go to, I want to go to gold. Gold is up $4 at 1278.7. What's really important about this, I've got a G/C. There was that pattern that we spoke about the other day, and in fact, the neck then dipped down and it went underneath the body, which is I don't want to make it too complicated now, since I'm doing this chart in a different manner. That is, I'm showing it in a different manner. So let me just say, 1263.7 was what I anticipated it would test. It broke under it 3 days ago. 4 days ago, 3 days ago, it was still under it, and then you spiked above it, and now you've got an extension. And this is very important because I had said that the 200-period exponential moving average in the weekly chart at 1273, I think it would tell 1277, that would become a target in the weekly chart, and we've gone just above it, and this is now leg C. So gold is acting very well. The monthly chart is good, not great, but it's good. And you've got a peak E in the 120-minute chart. And all I can say is that I'm going to have to do this. I'm going to go to the silver SI, which is the continuous contract. And you'll see that silver made a peak E. It isn't actually as strong as the gold chart at this particular point. It's not weak. It's just, I'm saying it's not as strong. And it hasn't yet made leg C in the weekly chart, which means that the continuous contract has to go above 18.54. And the next thing I want to look at here was the relationship of the dollar. The dollar is weak. It's not very weak. It's down 14 cents at 100.57. And what's really important about it, you see the downtrend line. Oh, I have to show the chart right here. You see this downtrend line, the weekly chart, the middle chart? That says that right there, this week, it can go to 101.54. If it goes to the 101.66 area by tomorrow, I just don't know what would do it. But if it did that, that would start leg C in the daily, but it would also be a breakout of the downtrend line in the weekly chart. Monthly chart says, hey, just a high-level consolidation. 120-minute chart says, oh, be careful. This is going lower, and that's going to help gold a little bit more. I want to look at high-grade copper, because high-grade copper over the weekend, I'm showing the charts as best I can. I'm clicking on them. It should be in the den. If you click on my chart in the den, Z, you will see them. You'll see that high-grade copper took out the left side low of great importance, the one that was on the 9th of March of 2.558. That arch formation makes a peak C minus. That's the lowercase, the dreaded H pattern we always talk about. And now we're testing the lower part of the rectangle. I'm going to lower the rectangle all the way down to here and say at any point in the next week and a half, if copper goes through 2.463, that's going to be really negative both for the weekly and the monthly, and it's going to be telling us something of great importance in terms of all the patterns that we're looking at. Now what I'm going to look at, you click on them in the den. If you click on that, you'll get it right there. It'll be up. We'll try to do something during the break that's coming up. Break's coming up right now. Let's see if I can do something to be able to get back online. We're in the den. You can see the charts. Basil Chapman, Tiger Technicians Hour, and the Dow is down 48. S&P's down 7.10. The sell mode continues. The most important thing, we get the sell mode tomorrow, Thursday at 4 o'clock, end of the week, in the weekly candles. We'll talk about that when I get back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks. All right, charts up. Let me just go through them one more time. So the Dow INDU is trading at $INDU. There it is. You see the arch formation. This is the second arch formation that we're looking at. For my subscribers, I went through this whole thing yesterday. I showed them what we're looking at. Chapman Wave 5 in the 120-minute chart. Went to a Chapman Wave 5 on the way down. Now we've got a bounce that's failing under the 9-period moving average. On the right, you've got the stochastic and the MACD all failing. This arch pattern is very potent. That's the 120-minute chart. Here's the daily. Over on the left side, I've got it with the Chapman Wave 5s plus our different patterns. Look, the red one is the 20-period exponential moving average. The blue line there is the 9-period moving average. Yeah, the same thing again, but it's with the MACD and stochastic failing. Stochastics are holding okay, but it's not giving strength to the price of the Dow, and the MACD is deflecting lower, and you've got the on-balance volume at lows. This is just not a good sign at this particular point. If there's going to be a snapback rally, this Chapman Wave inside track right here, you better see this work its magic like it did yesterday and hold beautifully at the 20,512 level to give you a rebound. But that rebound didn't even make a leg A in the 120-minute chart, and it failed under the 9-period moving average. So this is very important, and looking out between today and tomorrow, I'll just tell you that a close below 20,000, a push below 20,500 would be very negative. So right as we're speaking, looking at going back to these charts, looking at the 10-minute chart, you'll see right here at a trough D, you've got the MACD trying to flatten out, stochastics making a higher low. This is the moment where there better be a bounce at this between now and this is 22 past 11. Between now and the next 20 minutes, there needs to be a snapback rally between 23. It's at 23.43.75 in the E-mini. Needs to get above this moving average right here. It needs to get to 23.47 actually, just 3 points, 3.5 points higher. Okay. So here we go. Let's get out of this, and we want to go back. I want to show you the S&P. So the S&P, SPX.X. Here we go with, I always forget to tap on the chart. It's SPX. SPX is arching over. It's into this candle, and all I can say is that, once again, having gone into 50% of this wick of yesterday's candle to the 23.46.75 level and gone a little under it, this is the moment that it better snap back, because the MACD is wanting to turn up, but it can't. It's deflecting lower, and stochastics is flattening out. So this is the moment that something better happen. But the weekly chart is a lot more, in a certain way, more negative than the Dow. But technically, I should have the down arrow there. I'll probably do it by tomorrow. We're watching this closely, because a close below 20, exactly where we are, 23.48. The close below that right now would be very negative. So now I'll go quickly back to the QQQ series. Remember, the reason why I got the sell signal was a number of reasons. The MACD was failing, stochastic was failing, and yet you got a price move, to the upside that broke out above the high that was made on the 3rd. 132.81. And then it popped up to 133.48, so that was on the 5th of April, and so we are still short this particular instrument. And now I want you to go back to gold just to review quickly. The gold, you see, there's a doji candle right here. The stochastic is not that good. The MACD is good. So my contention is that gold is a fear factor here, and it's running for other reasons. That's one of the reasons I think why you're looking at gold stocks doing a lot better. The gold itself doing a lot better than gold stocks in many ways. But I love the fact that it tested the 200-period moving average, and in leg C, which says it should really go to a D, because the stochastic's at 86% in the weekly. The MACD is good. So far, gold is acting very well. Okay, monthly chart, yep, it's good. It's not great. Now, let me just go on, because this is what I want you to show you. High-grade copper, it's really important that high-grade copper actually does something. Funny, I just got a piece of copper from someone from the Constitution. He was doing the copper work on the Constitution. He gave me a piece and a couple of nails. Anyway, so copper right now pulling back very sharply underneath 2.558. The low of the 9th of March, not good. If it closes under that by Monday, it hasn't even gone back. Hasn't gone back over 2.5585. I would have to say that copper is telling us a story about international building and just activity in general, economic activity. All right. Now that's what we want you to do, is we want you to quickly go to, it doesn't have to be quickly, but I am going to go quickly to crude oil. Crude oil is in leg D. And this is very interesting. And here's the pattern that we're looking for. So for subscribers, we're short indices and certain sectors, but we're long a multinational oil. And at the same time, that's only because crude oil has held well. This multinational oil is doing okay. It's not doing great. But I thought it would do better, and I just wanted to be there in case it worked out. But I'm just telling you right now that I'm watching crude oil very closely, because the monthly pattern of the lowercase h to lowercase m, I drew it in weeks and weeks ago, is something that is very important to me in terms of chart patterns that I always look for. Let me just open this up. This is the weekly chart, and you'll see that this pattern that is in a containment area, it'll be a little messy, but I'll do it. This shows you in gray, that's the rectangle. And copper is just, crude oil is just stuck between the 55s and the 46s, 47s for now. But it is good action on the daily chart. I'm not going to fight with that. I'm just going to say it's acted well. It's very important within 2 days, tomorrow and Monday at 2 o'clock, where copper is. If copper is snapped right into the 54.80 to the 55.30s, it's starting to test the left side high. That would be on the 23rd of February at 55.43. If it starts to pull back, 51, let's call it 52.30 to 51.70 is going to be really important support. So technicals are really good in copper. Price has done pretty well. This is a strong leg D. I would just have thought that with all this power in the technicals, that it would already be above the high of the 23rd, somewhere in the 55.70s, and it's not. It's at the 53.27 level. So I'm going to be watching that really closely. Okay, I think we've covered everything except one of the most important areas, and that's the TLT. My contention has been that the market will start to pull back quite sharply if three things happen. One is if the NASDAQ finally gives a sell signal and these big stocks like Tesla, etc., start to pull back very sharply. Number two is that the volatility index starts to move above the 13s and goes into the teens. So those two factors have started to be met. And the third one, which is probably the most important, is that the safety of bonds would see the TLT push higher as the Japanization of our bond yields sort of comes back into play. And here we are, we're in leg E in the TLT at 122.77. It's not such a big move. It's up 35 cents. I'll show you something else. If you look at the US, this is the dollar, the currency, you'll see that it has not gone to the 200-period exponential moving averages, which is at 153. Let's go to 154, and it's at 153 and 230 seconds right now. Look, keep your eye on the left side chart. Left side chart. You see this? The stochastic, the TLT has done very well. If I move it across, you'll see where the 200-period moving average is way up with 124.50. We're at 122.77. A lot of room to go. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So the objective in the Chapman wave is to get you to a D, and then other things can happen. Look at this. Here's the 2-minute E-mini chart. It goes from a trough right here at 9:36 this morning at 2343.50. And it goes to peak ABC, goes sideways, and then pop, it goes to a D, and then what happens? It starts this big collapse. So when I was watching Larry Pesavento this morning, Larry does a fabulous show as always. He shows the DAX, the 4-hour chart. So I thought, I'm going to copy this chart, and I'm going to show whether or not there's a Chapman wave. And I did that, and then I started looking at the peaks, and I count all the peaks, and it goes peak A, B, C, D. There's the 4-hour DAXs, the German DAX chart, and it goes peak D, has the sharpest pullback, and then it goes peak A, B, C, D, pop. There's a silent doji on either side of that candle, and it's an inverted Chapman wave inverted Roman candle, which says if you break to the bottom of this candle and close below it, that's a big negative, and bam, it goes all the way down, and it goes to a trough C and has a bounce. I just thought that was fascinating. I love looking whenever anyone shows charts. I'm always counting the peaks and troughs, and I know that a lot of people do that who have studied the Chapman wave methodology. Now, if you're looking at, I'm going to get rid of this. I didn't do the dollar. I thought I did the dollar. I didn't. The dollar made a peak B. It is pulling back here. The stochastic is at 84%. That's okay. It's good. The MACD is still holding quite well. And I'm going to be watching this real closely. Why? Because within the context of the monthly chart, this is holding pretty well here, holding this long-term trend line, which was the left side, right side price time at Chapman wave inside wedge target line. Look at this beautiful cup formation. Take it from that level, went all the way and it hit it right there. It was a 1 month late out of years. And then what happens is we've stalled in this area. That to me says that the dollar is still seeing some internal strength, which is very interesting. The weekly chart says, hey, this is going to be very important because we've made one arch formation. You closed above it. You went lower, but you closed above it in the weekly chart. That also sets up a potential for a cup formation. But the other parameters, the dollar needs to go from 100.54 up about a point and a half. It needs to get to 102.10, just above 102, and then it'll say very good action. But if it starts to fall and it goes back into the 99s, it's going to start to fail because the technicals are going to weaken rather than strengthen. So this is the parameter I'm watching real closely. At 100.33, it closed below 99.70, and the daily chart impacts the weekly chart negatively, and a close above, even short-term, 101.10 is good. I really want to see leg C start above 101.34. And really, you need to get all the way to in a V-shaped pattern to the top. So the dollar's at a very critical level. Gold, I'm still seeing it as a, how can I call it? I see it as a defensive safety play, really, more than anything else. All right, so I did that, and I needed just to follow it up with EUR USD. I always do that, the euro-dollar currency pair, trying to form some kind of a support level. It should, with the dollar acting weakly, the euro should have been much higher, and it's not. That's telling us a story about something else to do with currencies. Maybe it has to do with France, whatever it is. It's not acting all that well. And if I go to the USD JPY, which is the United States dollar and the yen, look at this, how bad that is. Made a peak C1, C2, Chapman wave top in the weekly chart, and is pulling back very sharply. So there's a lot going on here that says, watch out. And let me just, I had a question about the SMHs, which is a semiconductor index. Look at that, giving back that, this is, for my subscribers, we are short, and I call this, it's not a great example, but it is an example of a Chapman wave Roman candle on the upside. When it happens this close to a major top or an all-time high, that's usually a big negative. And if you go into that candle halfway through the candle, take out, in this case, 77.44, and you start to trade below it for a couple of hours on the daily chart, there's a really good chance that not only are you going to go below the low that was made in that candle, which is 76.81, you're going to take it out. And that's what I'm looking at. And look at this. The semiconductor index is absolutely giving me not just a sell signal here. Of course, I have to wait for tomorrow, Thursday, for the last day of the week. Not only is it giving me a sell signal, I'm probably going to go straight to a sell mode in the weekly. And that's saying you've got some time to the downside in this move. And that's really what I've been asked about so many times. What do I think about this? And my answer is that I'd be going along only in certain sectors, certain stocks, and they have to be concurrent with the root of whatever it is. Like I chose a multinational oil only because oil was acting quite well. Not that there's always a direct relationship. At least there's a relationship. And TLT is doing well. So someone asked me about the XLU. XLU is doing very nicely. We are long the XLU. This is at 51.68 right now. It's making the double rising cup formation that I like. Let's see. It's still young. You never know. XLU is the S&P Select Utility Spider Fund. So mixed in with the shorts, we do have some longs. And a couple of things I wanted to say is question about the IWM. Yeah, I did not have a chance to do it. I'm going to do it right now. P in the den wants to know. Yeah, it just keeps being repelled at this diagonal trend line resistance after the peak F top on the 1st of March at 140.86. The Russell 2000 I shares, not good. I'm very nervous about this market. I think a lot of lay people were getting in over the last 2-3 months, and they didn't know why they were getting in other than because people kept saying the Trump rally, the Trump rally. Well, almost 6 months of a Trump rally. Well, November, December, January, February, March, February. So it's 4 months. Hey, time for a rest. And that's what we're looking at here. So I am very, very cautious. Now I'm going to get to my favorite. We're going to look at the VIX. We did not buy the VIX this time because we have just so many short positions. I didn't want to get too carried away. So we left the VIX. I did give parameters. So we do not have the VIX. But the VIX is trading at 15.69, up 62 cents at 15.69. Look how quickly. You remember I spoke about this for so long. I defined the lows, the rising lows, and I said this is very important. We went to a peak D at 14.16. Pull back 3 points to the $11.05, was it? $11.03 level. That is a whopping pullback. What is it, 20%, something like that? And now what we're looking at, now it's more. Now we're above there. So this has the potential to be an E. It also has the potential to be a brand new A. The VIX is in play. That's all I've been talking about for the last couple of days. The VIX is in play. And the monthly chart, so the weekly chart went to a peak D and is now recycled higher. The weekly chart is in leg D, but we've still got to wait until tomorrow at 4 o'clock. Anything can happen between now and then. We've seen that on Fridays or Thursdays, in this case, very often the last day of the week. So this is what I'm looking at. The volatility index suggests to me that fund managers finally are saying, you know what, I don't like what's going on. I'm going to buy insurance. I don't know yet whether we got the selling. So if you don't mind, what I'd like to do, if I can find the darn thing. We're right here. I'm going to do this. You remember I showed this? I don't remember if I did show it in the den. I'm almost sure. I showed it to subscribers. I said, I believe that race has ended its race and it's about to turn down. What is race? Race is Ferrari. And remember I showed this chart. I think this leg F is going to become a peak F, and we could be pulling back, and it could be a tell on the overall economy, etc. Well, since 74.99, it's trading at 71.70, so it is pulling back only 5%. But I'm going to be watching that real closely, and then when we come back, I'm going to look at some of the IBD.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back. So let me just have a look here. The printing seems to be getting smaller and smaller here in Investors Business Daily. Or maybe my eyes are getting a little tired. So SPG. So you should be seeing my charts. They're back live. So SPG trading at 174.22. This is Simon Property Group. This is the malls, all the big malls around, certainly around here. Doing very well. Yeah. So the question is, Basil, can you look at what was it? Can you look at SPG? It looks like a breakout. Thanks for a great show. Yep, I do my best. So we're looking at A, B. Yes, it is holding very well. Great chart. Well, it's a great chart on the daily because the market is pulling back so sharply. So I'm just going to suggest to you that if you are looking at, maybe not. I'll ask Al, my wonderful engineer. Al, are these charts showing up? They're showing in the den, or they're showing otherwise on Tiger TV? I don't know. But in the meantime, you're looking at SPG at 174.19. It's holding very well. Would I go long right now? I'd be very cautious about going long most things, unless, as I say, it's tied to something that is doing very well as a root position. Maybe like gold is doing well, so you can go for a gold stock. Maybe crude oil, so you can go for something that's involved with crude oil, but make your stops very tight. But let me just say that the weekly chart is trying to turn up here. All I can say is that at 174, until I see that gold, that SPG is trading nicely above the 175.71 level of the 4th, I'd be a little hesitant to say, yep, buy it, go long, great looking stock, should do well. I'm just going to say, yes, it's doing well right now. It should continue to do well because it's ignoring what's going on in the overall market. But I'd be a little bit careful. So I would, if you want to start a position, you can start it here, but make a fairly tight stop. I'd have a 1.5% stop on the stock. Okay, so that's SPG. Next question I had was, so I did the VIX. I did actually, I've answered many of these questions. Delta Airlines, Delta DAL. Yeah, try to rally and it's fading. I'd be careful airlines right now. It just has to do more with the economy than anything else. Can Chapman Wave be applied to Vanguard ETF? Anything you want. The daily chart has a closing price, but I can do it on the weekly and I can do it on the monthly. And I usually do it on the dailies as well when I have a fun. Just type in the symbol and I'll show you exactly what I mean. I've got, where's my Vanguard? Where's the Vanguard? Where's the Vanguard? Oh, I won't be able to find it. Oh, there it is. Dollar W5000. Dollar W5000. That's the 5,000. There it is. Is it still? No, I got to renotate it all over again. Lost it. Sorry. It's the same thing down. They all look the same. They're having strong resistance, making arch formations. Be very careful. Try VTI. Oh, VTI. VTI. Yeah, it's the same thing. So let me write that down. VTI. If I can reach the VTI. Okay, I'll check it out over the rest of the day. I'll get to it. Okay, what I want you to show is Arista Networks. These are the top in IBD. Arista Networks is ANET, A-N-E-T. So I'm not sure about this. So yeah, so I've got this as a peak D at 135.27. One of the reasons why I felt more comfortable about the short on the QQQs is that almost all the stocks that I was looking at, look at this, it's held very well, ANET, and Arista Networks. It's down 277 today. It's down -2. It's at a peak E potential in the weekly chart with a doji on the left, a long-legged doji in the middle, right there. And this week we'll see what happens. But I can just tell you this: if there's a close below the long-legged doji, a close below 128.66, be careful. This one, which looks fantastic in the monthly chart, could have a bit of a pullback. This is Arista Networks, cloud network software. Let's go on to Cognex, CGNX, right there. Same thing, peak F in the daily chart at 100 on the 3rd of April at 86.88, and now it's trading at 81.43. Peak F potential in the weekly, peak C potential in the monthly, still fabulous monthly, but shorter term to intermediate term, be careful. NVIDIA, I gave that as a sell signal, perhaps a hat-trick top sell signal ages ago, and I still think it's in that pattern. Look, there it is. Makes a high, an all-time high at 120.92 in second week of February, and trading now at 97. This is a problem. Nutrisystems, NTRI, is that right? Yeah, Nutrisystems, making a peak D, arching over, hasn't broken down. Still a nice looking stock. Technicals are fading miserably, but a leg E, potential peak E in the weekly. I'm just saying to you, be very careful here. Stock I want you to buy this morning, we didn't get it, is in that group, and it's done very well today. So I'm watching that. There are a couple that are still acting very well, but the majority are not. Look at Amazon. Amazon right now trading down $2 at 900, made a peak D. I've got it as arching over, but a potential peak E in the weekly, Chapman Wave 5, and a Jeep/C in the monthly. I'm just saying be really careful. Be careful, careful, careful. So now I'm not sure. I need to ask my engineer something, but in the meantime, let's go. So MRO is Marathon Oil. Yep, Marathon Oil. Very nice. Gone to a leg D this morning. Right there, C to a D in the daily. Only a leg A in the weekly. But I'm just saying to you, be very careful here as well. I think that it's acting pretty nicely. Marathon Oil, 1661 up a penny. MACD is good. Stochastic is very good at 91%. But be prepared that it could pull back about half a point to a point. It could actually touch 1585, the 200-period moving average over the next week and a half. But I'm watching these real closely. Is there a trend change, a tidal change in the oil sector area? I don't know yet. And that's what we're going to find out. Next question I had was KRE, which is the regional spider S&P. Yep, there it is. No, be careful with all the bank stocks. Look at the XLF I mentioned yesterday. Be careful. Look at this. Down today, down 0.90%, 0.90%, down 20 cents at 23.18. Let it play out to the downside. Remember Goldman Sachs? I said, wait. Look at that. Look at JP Morgan. Be careful. Okay. Now, I got a question here about, when was it sent to me? Sent to me about, let me just think how I can phrase it, if I can remember correctly. That's right. So essentially the question was, what is your timetable for this pullback? Well, I've been working a lot on that for weeks now. I'm going to be having a webinar on April the 20th. It's a Thursday night, and it's at 6 o'clock, and it's for subscribers. because there's it just coincidentally, there's this moment here where you can get Tiger dollars. You can use Tiger dollars as well. Or you can have a trial subscription. A whole bunch of things are going. Check the front page of TFNN. You'll see all that information. The reason why I want you to have a webinar at this particular time is because of the question that I had, and the way I wanted to answer it is that I had to wait over a month before I got the sell signal in the daily NASDAQ QQQ, the NDX 100. And that tells me we've got time. I'll be back and talk about it.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. So let me just do this. One of the reasons why today was such an important day is that the volatility index 120-minute chart made a peak E yesterday at 15.88, pulled back just a tad. And that said that the market is spiking up that much to the 15s essentially says the S&P should have been down triple-digit down. S&P should have stayed down a double-digit, minus 15 to minus 17, and it didn't. When I said to subscribers to my opening call this morning in my Traders Corner section, we didn't get the pullback. Even GE acted quite nicely. UTX acted well. What's with that? There's a problem. And that if the VIX holds high and doesn't pull back today, be careful. Yesterday, I mentioned, 2 days ago, I said, be careful because I'm anticipating there really could be the signs of a minus $300 down move to the downside. I still see that as a potential, because in this arch formation, I just have to say that one of the things I'm always very careful of is in this particular pattern right here. This is the daily right here, daily on the left and the daily on the right, the same charts, except I've got different technical indicators. All I can say is that if the Dow today cannot rally to just a minus 40 over the next hour or so as the VIX improves, but instead goes to another sell mode on the short-term charts, if you take out the low of yesterday of 20,512, then you're already testing this Chapman Wave inside track propellant support level. You take that out, it's just going to be a real quick trip down to the 20,390s, taking out trough C for a leg D to the downside. And then we could be ready for a pretty decent rally, maybe whenever it is, and maybe early next week, a good bounce, but only a bounce. And I'm just being real careful. I'm just saying to you, be careful. It's really, I don't know how else to put it. Just be careful. All right. So now let's go back to a couple of things that I wanted to show you. Basil 11 from last Friday, down 300 soon. Yeah, that's what I was last Friday. So I'm saying to you, there is so much disbelief that this is the move down because there's been so much buying that I have to say to you, the action in the QQQs now down 0.46%, same as the Dow, but the S&P 500 down 0.5 something percent, is just saying to me that maybe there is a little too much optimism and that we haven't even started. If I look at the ARMS index, the ARMS index is only at, the TRIN is at 1.16. It's not even pushing up into the 180, 190, 220 area yet. So there's still disbelief in this. So please be very careful. That's all I'm saying. Be careful. There's no need to be a hero. You can put some of your stocks, make them a little bit tighter. You raise cash in this position. You can have so many things to buy when the time comes. Just that's my main point right now. Have some patience. We will make a low at some point. The volatility index is in play. It could even have a pullback today, but it's in play from what I can see. And we've only just begun the move to the downside in the Qs, which is a month late. Remember, tops form arbitrarily, bottoms fall almost together. The 6th to the 9th of March of 2009, within 2 days, you made lows. You go look at the tops. In 2000, the Dow made its top, I think January the 14th. You had to wait all the way to March before the SOX and the S&P made its highs. So keep that in mind. And that just says to me that a lot of the stocks I just mentioned, about 4 or 5 of them in the NASDAQ top 10, they're only just now pulling back. So just be a little careful, even if they're bounces. Don't be fooled by them. Have patience to do your buying. Have a great day. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.